All right, folks, welcome back. This is a short little video on Forex. I promise not to keep you too long. We are looking at the daily chart of the dollar index, and I shared some charts on Twitter and gave you some levels, and that's what we had. And you can see we did, in fact, trade down into the sell side liquidity, into our fair value gap in the form of a buy side imbalance, sell side inefficiency, BISI. So that's where our levels are. Everything will be linked to this logic on the daily chart. Hourly chart here, you can see opening price on this candle here for the 9th of September 2023. Sell side liquidity pool, relative equal lows. The market's going to open, rally up, sell off, down into our fair value gap on the daily chart. All right, on the 15-minute time frame, you can see buy side liquidity here, sell side liquidity here during the London session. Okay, so midnight opening candle right there. Opening price is extended through. If we're bearish, we're looking for lower prices. That means it is a risk on scenario. And dollar, if it rallies, it will take out buy side or trade into an inefficiency in the form of SIBI or fair value gap. The market trades above, takes out buy side liquidity, attacks the sell side liquidity here. New York open kill zone, which is 7 o'clock to 9 o'clock in the morning, New York local time. You can see we had a drop in here. We'll take a better look at that when we get into the 5-minute chart next. Then we had a really nice SIBI here, sell side imbalance, buy side inefficiency. Notice that this line here is that old relative equal low on the daily chart. And then we have it here as well. The retracement does not come back up to the daily old lows and does not come back up to the old lows here. So support and resistance, this is why I don't like it. It fails. But if you take my SIBI, sell side imbalance, buy side inefficiency, here, it trades up to consequent encroachment, which is the midpoint of that. Okay, this is a gap. It trades up into that. Fails to make a return to old daily lows and old equal lows over here. So this is where you would expect the algorithm to kick in. It does. Sells off, trades into the daily fair value gap on dollar index, and it closes the session making the low of the day. When you know it, right at the end at noon, London close kill zone. 5-minute chart. Here's that New York open kill zone. Starts the day here, breaks down from high to low, short-term shift in market structure, fair value gap. What is that, folks? That is your model from the 2022 mentorship right here on this YouTube channel. Sell short in here, stop above this high here, let it rip. Relative equal lows, the daily sell side liquidity pool, which is this level here, and then the fair value gap down here. And where does it turn? Again, at noon, exactly how I teach you in the core content and on this channel. Moving on over to euro dollars, their daily chart here. These are the levels I gave you on Twitter. If you're following along on there, I suggest you do that because otherwise, these videos are going to seem a little disjointed. So we have buy side liquidity here, an old high back here. We're looking for that as well, and a fair value gap right in here. It's traded up into it, and then we consolidated intraday and rallied up into our buy side liquidity pool there. Here is the hourly chart. You can see our order block here on the 8th. We drop down into that, rallies away. That's the extent of what we're going to refer to it over here. So prior to all this consolidation, this down close candle, the opening price, extend that through. You can see the market starts to respect that and rally up. More specifically, on the 15-minute time frame, euro dollar had a sell side liquidity pool here. But if you had this one and not this one, don't be discouraged because either one's correct, but I like this one because my eye jumps right to these levels where candles get real close to being equal, whether it be the highs or the lows. My eye just goes right there. Over time, training with me, you'll adopt that same skill set, and it'll just be like second nature. So the market drops down in London open, rallies back up, takes out buy side, expands, small little retracement in, and rallies up, creating the high up here. If we look at it on a 5-minute chart, we have the London open kill zone, 2 o'clock to 5 o'clock in the morning, New York local time. Sell side, taken. Rallies up into 7 a.m., beginning of New York open kill zone. Okay, that's this little rectangle here highlights exactly when I'm looking for a setup to form in Forex for the New York session. Between this period here and here is when I'm looking for a setup in London Open. And this is when I'm expecting the day to be completed. Okay, so the daily range high or low should be forming if it's going to be a trending day. If it's bullish, generally between 10 o'clock and noon, New York local time, it's going to create the opposite end of the range. So if we're looking for the low to form in London, which is exactly how I teach you on this channel, here's your low of the day forming. If we're bearish on dollar, it means we're bullish on euro dollar. We run up, small little volume imbalance in here, trades down into that with a bullish order block right there. Rallies, retraces back down into order block as well. Ramps up through buy sell liquidity, and this little exclamation point is for me to remind you that if you take your Fibonacci, anchor it to this low, up to this high, and use a 1.5 standard deviation. Okay, how do you do that on your fib? Just go to your fib settings and put in 1.5, and then when you drop this on this price swing here, you'll get exactly the closing prices in here. You won't get the wicks, but you'll get the closing prices and time. So we have time, which is London close, 10 o'clock to noon, New York local time, and then price, which is this fulcrum point. When price runs through that, we don't know if it's going to go up there yet until it takes out this high. And when it does, we start doing standard projections on our Fibonacci, which is going to be standard deviation 1, 1.5, 2, 2.5, 3, 3.5, and so on, until it would meet a time window like the kill zone here. So I want you to study how the low that was formed in London open kill zone, as I teach, the continuation in New York open kill zone, and then the high of the day is forming in London close. And your homework assignment is to get to that closing price right here and that opening price with your fib between this low and that high, measuring that, and your projections will take you right up into that right there. And that's going to be it for today. I'll touch base with you later in the week. It won't be every day. As I mentioned, I'm doing a slow rollout with the Forex, but we will be daily every day starting on February 7th. Until next time, be safe.